Hi, I'm Brooke Thackeray. Welcome to What's Hot and What's Not in the month of July. I'm filming this in downtown Toronto as I walk in between appointments. And I just wanted to talk about a couple things before I get into the regular page flipping in my Thackeray's 2023 Investors Guide and talk about the seasonal trends like I usually do. First of all, I want to say that I'm going to try and keep these monthly videos to What's Hot and What's Not down to 10 minutes. I can talk a lot, but I'm going to try and keep them really short, or at least 10 minutes. Which means I won't be spending a lot of time on the individual graphs. And so that means if you want to take a look, you can always pause the video and take a look at as long as you want on the graphs. Or if you're trying to understand the graph, you can always buy the Thackeray's 2023 Investors Guide as well. Now, before I get into the book, I just want to talk about a summer rally. So if a summer rally does happen, it typically happens in June and into mid-July. Coming into earnings season. So yes, that happens on a seasonal basis. So that's true for all the earnings months, January, April, July, and October. The first half of the month tends to be strong on a seasonal basis. Investors want to get into the market before the earnings get going. And that tends to push up the market before earnings season. Now, who kicks off the earnings seasons? It's the banks, the big banks. Now that's important this time around because if you take a look at the big banks, they haven't been performing very well right now. And you want the banks to participate in the rally. You want that to happen because rallies tend not to last very long if the banks aren't participating. And right now, they're underperforming overall. And they kick off the earnings season. So we're looking at the banks kicking off the earnings season next week. We start to see the banks come out with their earnings. So something to watch out for on this. So typically the market starts to fade on a seasonal basis in mid-July. And you should also note as well that the two worst contiguous months of the year for the S&P 500 are August and September. So yes, the market can rally here, but just something to watch out for on a seasonal basis. We could see the S&P, the summer rally fade in very shortly actually. So something to watch out for. Let's jump right into the seasonal trends. Here's the Thackeray's 2023 Investors Guide as a reference. We just want to show you the summer sizzler. That's exactly what I've been talking about. Really, the earnings trade coming into mid-July. You can see here that I have it here as the last 2 market days before June month end to 5 market days after Independence Day, which would be next week, but it can run into mid-month as well, something to watch out for. And we can see here that that trade's actually worked. That worked in 2020, that worked in 2021, and that worked in 2022 as well. But just remember, we do see on a seasonal basis weak performance in August and September. And if we flip to the summary page, we can see here this is the average month for the S&P 500 from 1950 to 2021. Once again, here's that positive trend in the first half of the month, and the probability of the daily gains bars also confirms that as well. If we look at the sector performance from 1990 to 2021, information technology at the top here, 1.7%. Obviously, this is ranked down in average gain, but these are the frequency of outperformance relative to the S&P 500. This column really doesn't give us a lot of information as far as that goes to say, well, this is particularly strong. We'd like to see strong numbers here. And this really has been from the tech performance over the last few years. It's really helped to bolster this. Financials tends to actually be at the top here, at least on average gain. Materials, healthcare as well. At the bottom, we do find energy. Now, energy starts a strong seasonal period in late July. I'm flipping back to the energy strategy earlier in my book. Here you can see that the energy sector has a strong seasonal period from February 25th until May 9th. And in that period, we didn't do well this year. And the second seasonal period is from July 24th until October the 3rd. Now, that's not a strong seasonal period, as strong as the February 25th to May 9th. But when this doesn't work well in the wintertime, this seasonal strategy can work well here, and something to watch out for. So given that we didn't do well this year, from February to May, we could actually see this actually do quite well. If we take a look here, we can see in some of the selected subsectors, biotech up 80% of the time from 1993 to 2021. That's a huge number. Now, it starts a seasonal period on June the 23rd, and it runs until mid-September. So far, the biotech sector has been down in 2023. It's negative, and it's been underperforming the S&P 500. It has become oversold on a full stochastic oscillator basis. It looks like it's bouncing on RSI as well. So we could be setting up for a little bit of a run in the biotech sector, particularly if the S&P 500 is strong. Here you can see the monthly performance for the biotech sector. The bars in the graphs are the average, and the crosses are the median, and the diamonds are the S&P 500. So you can see July tends to be a very strong month for the biotech sector, 77% of the time positive from 1993 to 2021, and outperforming the S&P 500 80% of the time. If we go back here, we can see actually silver can do well. That usually starts later in the month, though. Home builders is at the top here. Home builders has been on fire. That's a totally different subject, but this sector has been on fire. Watch out. It could start to roll over soon. And if we take a look and go all the way down here, we don't see any really weak numbers for the sectors here. The automotive sector tends to not do so well. Look at the chips, the semiconductors, coming in at 48% of the time, outperforming the S&P 500. So it's a mediocre month. So we might actually see a pullback if the market starts to actually roll over. That could be translated into the chip sector. Gold is a strong seasonal period that goes from July 12th to October the 9th. Sometimes June can provide a good opportunity for gold. That was not the case this year. We saw gold go down here, and here's the start of June. It was a weak month for gold in the month of June. We've seen it underperform. It did become oversold here on the full stochastic oscillator basis. Looks like it may be pulling up here a little bit just before it starts a strong seasonal period, which is a positive sign. It was getting close to oversold on the RSI as well. So technically, it could be shaping up for a strong seasonal run here this time. If we take a look at the monthly graph for gold here, let's work backwards from September, which tends to be a very strong month for gold. Look at this, median average performance, and strongly outperforming the S&P 500. So September tends to be the real sweet spot for the gold trade. August tends to also be perform well, particularly relative to the S&P 500. July also as well, it's positive, and the median's positive as well. But it starts the seasonal period a little bit into July, so hence the underperformance relative to the S&P 500. Right now, though, we could be bouncing off an oversold condition, which could be a good entry opportunity to start this strong seasonal period. You can see here the gold miners has a strong seasonal period from July 27th to September the 25th. And if we take a look here from 1984 to 2021 using XAU, we can see here the real sweet spot for the trade is the month of August for the miners. And June tends to be a very weak month, and it was this year as well. July can be a stronger month for gold, but you really want to set from a seasonal point of view to be in gold miners for the month of August. If we take a look at gold miners, yes, we can see in June they were down. They underperformed the S&P 500, and they actually also underperformed gold bullion as well. What you'd like to ideally see is gold bullion heading up and the overall market heading up, and that would actually help gold miners to actually perform quite well. Here's the oversold condition that we saw the bounce off for gold miners. So we could actually start to see the run a little bit early, particularly if we see gold bullion starting to perform well. So watch that for gold miners. That could be happening because we're bouncing off an oversold position. The VIX tends to rise from July the 3rd until October the 9th. And from 1990 to 2021, you can see here that it's risen 72% of the time. And if you look at this chart here, you can see the tendency for the VIX to rise starting in July. So where do we stand right now? Here's a graph of the VIX. And if you can take a look at here, we can see the VIX has been going down. In fact, it actually is a 13 handle at 13.57. That's considered to be very low. The average from 1990 has been 19.5. So we are at a low level. We are back to pre-pandemic levels at this time. And we can see here that we could be setting up, at least on a seasonal basis, for the VIX to start to run higher. We can see that last year in July, we had a little bit of a flat spot, and then we saw it rise in October. The year before, we can see that the VIX started to rise in August and peak in October again. You can see the overall tendency is around this time of the year for the VIX to rise. The next page of my book is Verizon. It tends to perform well from August 24th until October 3rd. We have a little of a ways for that to start. I want to jump back to government bonds, which is earlier in my book. It is a strong seasonal period that lasts from May the 6th until October the 3rd. We've seen government bonds not performing well at this time. Here we can see using the ETF in the States, IEF, you can see here from early May, we did see that downtick that did take place as there has been some pressure on yields heading higher. but the sweet spot for government bonds comes up shortly. If we take a look at this monthly graph here for government bonds, you can see here that July tends to be positive for government bonds on an average basis and median basis. Here you can see 71% of the time from 1998 to 2021, we've seen government bonds being positive. And look at August. August tends to be very strong, mean basis and median, and 75% of the time it tends to be strong, or positive, I should say, as well. So what should we expect in the markets this month coming up? Well, a lot of the expectations for this month really are going to be set with earnings. I think they're going to be really critical this time around. If we take a look at what Refinitiv has as far as the forecast for earnings, here we can see Q2 for 2023. You can see that the earnings are expected to be negative 5.7 compared to a year ago. And so this is supposed to be the bottom of the cycle. It's very difficult for the comparables because of coming off of COVID. And they're expecting to see earnings start to increase from here. But I think this time around, if we see earnings come in lower than their negative expectations, we could be in trouble. And I think the U.S. banks are really going to set the tone. They're the ones that kick off earnings season. They start next week, and a flood of the earnings come out. And what you'd like to see in a rally, you would like to see the U.S. banks participating in that rally. U.S. banks have not been performing well in 2023 for a number of reasons. But if we take a look at the financial sector overall using XLF in the States as an ETF, we can see here that they have been negative in 2023, and look at the performance relative to the S&P 500 and the continued underperformance even after the whole debacle with some of the banks going insolvent. We've still seen the sector underperforming the S&P 500. I think it's key that they actually come in with stronger earnings. That really could help the rally to extend up further. But if they come in weaker than expected, I think that could be the inflection point for the market to start heading lower. I started the video talking about the summer rally, and it typically finishes in mid-July. That's when the banks start their earnings season as well. So that's going to be a critical point to be watching this month coming up. And don't forget to, on a seasonal basis, the danger zone, as I call it, is August and September. They are the two worst contiguous months of the year on average over the long term. Now, of course, Powell or the Federal Reserve could come out and do something to really help boost the market, but we can't count on that. And right now, he's saying he's not going to. He keeps committing to being more hawkish. Of course, the market's pushing back on that narrative. But the important thing to remember is, on a seasonal basis, that we do see some weaker times ahead starting in mid-July. Yes, the market could rally past that, but it's something to watch out for. Thank you very much for joining me today.